What's up everybody, Tom here with another video, and boy oh boy do we have a great video for you for the week ahead for the markets around the world. We're going to be covering a few new markets this week because guess what, there's some great opportunities starting to arise, and while everyone's saying it's a melt up in the US stocks, we're starting to hit those key critical resistance levels. Will we see a little bit of a sell-off in the S&P 500 and Nasdaq this week? Stay tuned to find out more, guys. This one is sure to be good. All right, guys, well, here begins some of the exciting bit, the analysis for the markets for the week ahead. But before we do that, let's talk about what happened previously. This is the last week of big moves in the S&P 500 stocks. Semiconductors were on a massive tear. Nvidia 16.37%. QCOM was up 22%. And it was just phenomenal movement there. Tesla also benefited from this, 9.7%, as it's basically an AI robotic company as well now. And then one of our old favorites coming through, 4.35% in Amazon. We'll be taking a look at that, Tesla, and more throughout today's video. But first, I also want to talk about what happened previously, and we spoke about the Russell 2000. I think we were one of the first communities to really start slamming that through as an idea that we're breaking through a massive 1 year long almost channel range, and it came up to 1.37, easily the best performing market in terms of the Friday close and some of the previous closes. 1.37% up in the Russell 2000, a movement to small cap by maybe Wall Street's funds. Well, we'll have to find out whether it's continued. Dow Jones 0.56%, S&P 500 0.37%, and actually the QQQ, the Nasdaq there was quite low, 0.08, hit that resistance and struggled to get through it. We'll talk about that soon. XLE was the best performing sector for the Friday session. IBB, unfortunately, down around 3.02%. And the jobs numbers out of the US, well, they look pretty damn strong, at least on paper. But the market didn't move that much. And I think a lot of that was more the commodities and the dollar index and other things that moved, which we will be taking a look at. I think a lot of that's because the market's going to do what the market's going to do anyway. These jobs numbers, as long as they're 100,000 either way, you won't find that the market is really listening to that. It's listening to the general thought process behind what's happening with the Fed, what's happening with monetary policy, where are we, where can we trap retail traders into thinking there's euphoria in the market. These are the types of things that I think about all the time, less so than the individual bits of news, because you'll notice if you were following the individual bits of news, especially non-farm payrolls, that overall, every single one of the announcements pretty much since the pandemic has resulted in a positive day in the US. So sometimes it's not worthwhile being fearful about this news and instead thinking, what is my overall technical analysis? Where are my stop losses? What is my strategy getting into this? If you're scalping into those bits of news, of course it could be damaging. But if you're swing trading or investing, it may not mean as much as you think. Talking about as much as you think, earnings season beat rate. We use the big broad number here, 73% on the beats, 1,127 beats to 420 misses. Still a very strong number, and it shows that the US economy is pretty robust right now, at least from the company perspective. So that's very strong. We've also got some more earnings this week. These are some of the big names. PayPal after the close on Monday. We will be live streaming that one. It'll be very interesting. Make sure you subscribe if you're interested in following that. Sure to be fireworks there. Palantir as well before the open Tuesday. That's going to be a favorite of many retail traders. Coinbase, an interesting one to look at. Probably doing okay there. And we got Fiverr and some other companies near the end of the week. So if you are in any of these, you need to be aware that the earnings is coming up. Another thing that we will like looking at is, of course, some statistics and data on this channel. And one of those is going to be the Seasonality, or just really statistical ideas of what happens with markets over time. And we'll notice that we're just approached basically a period where we expected an incredible sharp kind of movement up, and then we expect a small dip with a continuation into the end of the year. Guess where we are, guys? We're basically right here, right now. So if we're taking into account the statistics, if we're taking into account the key resistances that we've just met, should we be seeing a small amount of pullback in the market coming up around now into possibly something like the 12th of November? You would think so. In fact, the 12th is what we've got marked here for the resumption. Now, it doesn't mean that it's always going to happen, but when you marry that up with key technical analysis, it can make a lot of sense. So this is the seasonality for the annual markets around the world, and it's pretty damn good. Another thing that might symbolize some of this weakness coming in is going to be this, the fear and greed index, 85. Extreme greed, that's up from 1 month ago, 27 extreme fear or fear to greed to extreme greed, and it just keeps climbing. This shows that there's probably a little bit too much euphoria. I've seen it in the comments section down below. Some people said, Tom, the market never goes down, man. What are you talking about? It just keeps going up. And yeah, well, you are technically correct. Over time, it generally does. That being said, there still doesn't mean that you can't have some dips and take advantage of smaller little movements. So we just had a correction. There was no doubt. We're not thinking it's going down that much, but we could have a little dip moving forward. And some of the reasons are the puts are coming out of the market, which means there's more calls in there, more euphoric kind of movements. We've obviously got a whole bunch of these indicators showing us that type of thing. But we also have this extreme greed oscillator hitting past 80. Now, it doesn't always hit past 80, and it's not, again, a individual sign of saying, oh, I think we've hit a level where I have to sell the market. It's one of the symbols or one of the things that we use together with other reasoning. Let's get into our technical analysis now and talk about the markets for the week ahead. And I think the best place for us to start is going to be the VIX, the fear index. Almost like we could have a double bottom here. Hey, we've found that 15 a few times. Anyone that's been buying the 15 on the VIX has actually been doing very, very well, because you've been buying the 15 and a few days later, you've been getting anywhere from a 5 to a 15% move. Very, very nice here on the VIX. So the VIX did spike coming into the Friday session. This was after the jobs number. We saw it come through. And if it double bottoms, then what do we expect? Well, we expect a continuation, probably get above 20 during something that could be like a dip. One thing I will say to VIX traders is you've got to be short, you've got to be sharp, and you've got to be very nimble in those types of trades, because realistically, the VIX, or the volatility index, doesn't stay up for that long. Let's move over now to what I think is going to be exciting now over the next couple of months, and that is what we're seeing here on the DXY and, of course, gold and silver. Yes, you heard me right. Gold and silver are coming back into the analysis, coming into the back of November, and there are some seasonals around why we do that. Resistance here, DXY, look at this. Bang, bang, 94.50, just too much for it at this stage to close above. But we will continue to watch this, because we knew that we expected when it came through here that it would probably come to the 94.50. What I didn't expect for it to do is probably fully reverse from that number. I am still hopeful that the DXY, the US dollar, can strengthen up, but 94.50 is a key resistance. And until that's closed above, really it's just scalps, day trades, and we can't really get into the longer term swing. Because if you look at the weekly, anyone that hasn't been following it for a while, we had a massive double bottom breakout. And then of course we take that distance and we extrapolate it out for the future gains. But we've got a 200 SMA weekly in the front. We've got all these rejections on the weekly. You can see it here. Long leg doji last week in terms of closure. It's just too much for it at the moment with the DXY. Let's move over to what this means for gold. So gold is actually seasonally quite strong coming into the back end of November into that December period. So you can see here, November, the end, all the way up, very, very large move. We go back to 2019, back of November, decent move. Back of November or middle of November-ish, decent move. And we can keep going on for quite a few years. So there's been a bit of a seasonal here in gold. And while gold is more of a, you've got to know when to hold it and when to potentially not hold it, a lot of people love following this one. It did break out a very significant level, I believe, on the Friday close. We got above 1810. So this 1810 area had been holding it back for a while. You'll notice I've highlighted over here 1830. That's the real big, that's the big level that everyone's going to be watching. And if that happens with the seasonal, I think you've got to pay some attention to it. All of this, let's read the story here on the left-hand side. Long leg doji, rejection candle, rejection wick, long leg doji, decision made, potential here, and a huge weekly resistance around the 1830. So for many gold bugs, they'll be looking for that 1830 to break out. And then, of course, a resumption up to something like a 1920. Yes, I said that. It's a big move. You're expecting once 1830 breaks out that there could be some day trading and scalping and all sorts of opportunities potentially up to that 1920 zone, because that's the next really big key resistance for gold. And it's been lackluster for a while. No one's been talking about it. No one's been interested in it. And everyone's just said, oh, well, that sucks. Let's move over to silver, because silver also is showing some signs of recovery. We have the downward trend line that got broken through. I was really upset I missed this one, because what a fantastic inverse head and shoulders trade into the movement here, into the completion, which was this distance. Resistance 2480. That's a tick, 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 tick. Not that those are even ticks on the screen, but that's a fantastic setup. We've now had a daily hammer followed by bullish action, followed by another bullish day. It looks like we're going to try to test that 2480. And if we break through this, again, it's very similar to what we're seeing on gold. If you actually think about this from a pattern, you can kind of ignore this day because it happened due to some illiquidity events. And we've got a left shoulder, we've got a head, we've got a right shoulder now forming. Guess what? We break through. Where's the next level? It seems likely we go to the resistance, and we can probably proof that using our technical analysis. We can take the distance of what you expect from a head and shoulders. You can extrapolate that out, and bam, look where it goes, guys. It proofs it. It's fantastic stuff when you get it and you start to understand the markets this way. So silver certainly heating up. We'll start following that. Let's move into the stock market component. I did say we have a lot to cover. We certainly do. There's plenty of great things going on here. And of course, everyone's still talking about Tesla. Where does it stop, Tom? I get asked all the time. Look, guys, if I knew where it stopped, I would take the profit exactly there. Unfortunately, we can't really tell. So whether it's 1,300, 1,400, 1,500, or even higher, we don't know just yet. But what we can do is we can kind of figure out, how do we think this thing's moving? Is it slowing down in momentum? Well, yes, it is slowing down. You can probably even see in the volume it's slowed down a little bit. And we currently only have this 22-hour moving average, which has held it up through this run so far. So if you see something like this, let's say we see weakness here and it comes down, rallies, and then drops underneath, what that will be doing is it'll be creating a change of trend on the 2-hour. That's not a good sign, and we probably expect a bit of a pullback there. Now, investors won't need to necessarily worry because it's looking very good, but traders will be watching that. So is this the time to go and be buying Tesla? Probably not. Is this the time? But you can do whatever you want, obviously. I'm just going through the educational component. But is this the time to maybe continue to follow the trend and then to have like a plan or a system in place, scaling, all those things we always talk about? Yeah, maybe it is. It's starting to slow. You can tell in the charts, and maybe it'll consolidate and then have a nice spurt out. And you don't want to miss that either. So I think having a good plan for this type of thing is important. And at this stage, the 2-hour 20 is really the only information we have for Tesla. I took a look at the options for the week ahead. Not really too much going on here. 12th of November expiry date, huge amounts of puts in the system still. I don't know who's been loading these puts. Whoever's been loading puts now for the last couple of weeks, in fact months on Tesla, has been getting absolutely destroyed. And they continue to add in puts here. Is there a call wall? I guess you could say there's like one maybe around 1,300 and around current price, like maybe that 1,250. Both these levels are considered as slight amounts of calls in them. Maybe you want to watch them through the Monday, Tuesday session to see whether they start ramping up. But realistically, we've got a very strong put sitting around 1,100. That should hold price up as well. And I don't expect any of these guys to be making that much money through these put positions. I don't know who's doing it. They're pretty crazy, but good luck to them anyway. Let's move over to Apple. Apple's still holding above 150, but a little bit lethargic because of the dividend. We have that dividend that's coming in. And realistically, Apple tends to hover for a little bit after the div and then hopefully move higher. We still have some targets here at maybe a new all-time high, like a 165 from a technical perspective. And the price does still look good. There's no reason to say that Apple's looking terrible right now on the charts, but it's not going to be one of those explosive breakouts like we've seen in things like Tesla and other stocks recently when they've gone through highs. 150 was a great level to get through. But then the div's going to keep it down. And for now, we're just going to have to keep watching this day by day. And we will cover it on the channel. One that's looking a little bit more exciting, though, is Amazon. So we pretty much hallmark this as a very interesting position. There's a few reasons why. So let's just break it down briefly together. Well, firstly, since the earnings, you can actually see the volume's up. Both weeks, huge volume in. I wonder why. Like, why is Wall Street been selling it off and then all of a sudden, clearly they're buying it back? Well, there could be some reasons we'll check out. Let's think of the story, though. We've got a bullish kind of rejection. We know this weekly 50 exponential moving average has been quite strong for it. 1, 2 touches and both bought off. We've got a third buy off, bullishness. We've got weakness candle, downward trend here. and then bang, big bullish weekly coming straight through. And this is actually the second weekly bullish that's gotten through all of these hideous resistance highs. We had a false break over here. Will this be a false break again into what is seasonally a very good time for Amazon? Let's go into the daily here. Oh, look at that. Beautiful. Nice closure above. We got the closure above. We got a decent follow through on Friday. A little bit of selling off this resistance high. And once you close past that, the next logical zone is around 3,700. So I've got like a 39,400 on this, and there are a few reasons, mostly to do with the consolidation for quite a long time on the left-hand side. Nothing's for sure, but we saw something like Netflix do this, then break out very hard and go up to the next movement. We've seen it happen on Nvidia. We've seen it happen on plenty of stocks over time. And one of the reasons why sometimes you can get bullish on a stock with your technical analysis is maybe bringing in seasonals to it. November tends to be 80% of the time, this is just stats, positive for Amazon. So if you're 80% of the time positive, doesn't mean you want to hold it through December. It doesn't look very good in December. But buying that rumor into maybe Thanksgiving, into Black Friday, into Cyber Monday, these types of events has historically been quite strong in this stock, and it's had a good time there. And when you think about the story as well, it's been pretty languishing for the last couple of months. Are we expecting it to languish? According to the stats, yes. Then we expect a decent month of return, and then of course back to lackluster in terms of just stats. So the technicals are showing us something very, very similar. We'll move over to our indices discussion now. Let's talk about IWM, the Russell 2000. Yes, look at it go, guys. Look at it go. Nice breakout. We knew that it was pretty strong after it got through this zone. These two resistance highs were a big deal for it. Even though it hadn't broken through this zone, it certainly had shown us that it wanted to do the business. It did last week. Congrats to the community that was day trading this. I think you've done better than the indices through the sessions. But let's have a look at the weekly and put this in perspective. So this weekly is serious. I mean, this is the first breakout we've had. And let's just quickly go over here. Remember, this was happening in March and realistically Feb of 2021. The entire year, the Russell 2000 companies did nothing. Then all of a sudden we get that long leg doji decision made. Now we've got to make a decision. Well, where's our next level? It's going to be the distance of the channel sitting at about that 260, 258. We've closed above. Now, do we usually get a return back to test the resistance and then that becomes support and it buys up? Well, this will be the big discussion point of the week, because if we expect a dip to be small dip to be happening in the S&P 500 and Nasdaq, will that push the Russell down as well? I would say it probably will. So we could get that turnaround into the point up here. So let's have a look at the daily again. Let's go back there. Let's think about where the daily 20 moving average is. Imagine if we went and the 20 moving average was there. We got a nice little double bottom and then we broke back up. That'd be pretty awesome. Volume is definitely improving. That's good as well. There's clearly some rotation in there. We know the seasonals in this one, 80% of the time, very strong seasonals here in the Russell, November and December. And in fact, October, and guess what? October was a tick as well. It did quite well over that period. So we've got a great seasonal period here for IWM. We've got a fantastic November period theoretically. And the reason we're saying maybe a dip could occur is because of charts like this. So when we go over to the Nasdaq, I mean, this has just done the business. There was the lightning bolt change and it just went boom, 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 boom. We got bullish on the channel here. Unfortunately, all the shorts were over. We've had this ascending channel now for a long time. We have to pay some attention to it. Where is it? It's at the top of our range. And when we're at the top of the range, what do we expect for it to happen? Potentially find some consolidation or some sell-off. And there are a couple of things that are a little bit worrying here. I mean, the weekly, obviously, look, it looks super strong. You can't say, oh, it's looking weak right now, but it's hit this resistance and we're very far away from the 20 daily moving average. And we know it loves the 20 and the 50 daily moving averages. It comes back all the time in standard dips. If we take the percentage from the close, it's 4% away. Now, it was at one point on S&P 500, I think 4 or 5% away, and that's too far. When you're that far away from the 20 moving average, you have a tendency to pull back or consolidate. So both of these scenarios are very open here for the Nasdaq QQQ this week. Resistance at this peak, Monday, Tuesday probably will decide what's going on. And then we might have that little bit of a dip into the 12th or 13th or something like that, followed by a resumption of the trend to the end of the year. That's what the Seasonality is telling us, and the technicals tend to line up. But what about the S&P 500? Well, uncharacteristically high transaction volumes coming through as well. Some bullishness. Then we have, of course, the non-farm payrolls day, the good jobs number out of the US. And while it sold off in long leg doji here, a lot of selling. Is that going on to retail traders that are euphoric? Are they buying it up before they maybe push it back to the 20 or the 50 exponential and resume the trend? Long leg doji. Where is this happening? Indecision candle right at the resistance. You can tell I'm excited this week because there's a lot of opportunity in these markets. This video is longer than usual for a reason, and that's because there's some really cool levels happening. We don't always have it happen. So we've got the long leg doji. We break below this, what's going to happen? Some algos might come in. Some day traders might say, all right, it's time for us to finally get the bears out. The bears got destroyed all the way up. Maybe we dip them out here for a little bit, get that kind of 3 to 4% decline, and then we start buying it back up. That could be a very possible scenario. And I think a lot of you guys will enjoy watching this week. Let's see whether it just breaks through and keeps going long. That would be unusual, to say the least. Nothing's impossible, but it would certainly be unusual if it did that. And that would show me that when the market does pull back next time, it's unfortunately going to be another fairly decent correction. So it's not going to be a 20% or anything, but if it goes too far up, often the fall will be a little bit greater. It'll be less easy to see, I guess, in the markets, less easy to trade. So S&P 500, there are our thoughts for the week. We'll start with Bitcoin here as well into the crypto. We still have that movement up idea to the second movement, which is the B, to what I would like being the C. And the C, of course, is the pullbacks are very similar. A, B, C movement, many people know it as. I would love that to happen on Bitcoin. A lot of you will probably disagree with me and say, Tom, I don't want Bitcoin to come down. You stupid. I'm in this thing. I'm long. I don't want my coins to crash. It would just be cool because then we could predict the C quite easily, guys. But look, at this stage, Bitcoin clearly consolidating, ready for the next move. It could be a very big year here for Bitcoin, for the rest of the cryptos. If it's following what we believe, which is kind of like a 17 period, we've seen Ethereum come out a little bit stronger here than Bitcoin. We'll move over to that in a second. If we do have that pullback, it would be very characteristic of the 17 type of run. But take a look at this Ethereum move. It just continuously finds strength to strength to strength, and the buyers are here at this stage. So very, very interesting. And then you go and look at other coins like DOT or Link or any of these others, they're all improving. But you know what's not improving? The one that everyone thought was the best, which is ADA. And this continues to be languishing over here at $2. I'm sure it'll eventually pop, but what an interesting coin. Just, it's like becoming XRP, one where it sits there for a long time and then eventually trades off. I wonder why this is so far down. Let us know in the comments down below what your beliefs are. Usually these kind of coins that have been sleepers for a while eventually do pop, but they can take a long time. So you're better off getting in the participation phase than anything else. And at this stage, Bitcoin looks to be consolidating. Hopefully it breaks out high. Ethereum seems to be strengthening. And of course, a lot of alts are pumping due to the alt season happening right now. Let's move ahead for the week in terms of what we're doing. Now, if you're not aware, there will be, of course, daylight savings time shift in the US and CAD. This changes many people around the world's opens and closes for the US market, so please be aware of that. You've got Monday, Fed Chair Powell speaking 10:30 a.m. ET, so that's New York time. Then we scroll through here for other US news. PPI coming out 8:30 a.m. on the Tuesday. We've got more Fed Chair Powell speaking. Why won't he go away, guys? He just keeps talking. Stop talking, Powell. So annoying he is. CPI, core CPI coming out Wednesday, 8:30 a.m. And then we keep scrolling down and we have bank holiday all day on Thursday, November 11th. So it's a super interesting week here. We have bank holidays coming in. We've obviously got a whole bunch of conflicting bits of information. The Seasonality says it should be lower. The fear says it's super high. The markets are hitting key resistance. Is this going to be a little bit of a dip? Or is this going to be just a resumption of continuous strength here in the markets? Let us know your opinion down below. If you enjoyed the video, please remember to subscribe. Smash that like button, guys. And I know this is a long one, but I hope you found some value in it. Talk to you soon. Bye for now.